Hello, traders. So this is the weekly update or overview or review um, of the market. So let's go over the map first. The first things that I noticed is this week is fairly strong. This is the weekly performance of the S&P 500 broken down by the major sectors. So as you can see across the board, pretty much we're all green. Pretty strong week. We had news from the White House or the political news that the stimulus package is back on the board. Negotiations are back on the board. So that was pretty much what drove this week for the most part. Um, one thing that one caveat is that I believe late Friday there was news that the talks are not going as well as expected, and this is probably kind of political theater going on. So across the board, doing pretty well. Big tech, doing really well. Um, one thing is that real estate is hasn't really been going up as well with the market, and this is kind of indicative of just kind of like general market dynamics, so to speak. Real estate really doesn't run with the overall market as much, as well as utilities. But however, in this case, as you can see, utilities actually did really well. These are traditionally seen as hedges as well as the major telecoms, Verizon and AT&T, are seen as major hedges to the market in terms of just stocks per se, not commodities. So just a overall really good day or good week for the market. However, obviously that's not good if you're looking to go in longs because the market is uh, up so much. I believe this week is one of the strongest weeks in comparison for this year, I believe. So you have to keep that in mind as well. So just a quick overview uh, of the market before we start on the actual stock list. And one thing, let's take a look at next week's economic report. So there, as I go through a lot of these things, there's gonna be things that you might not understand or where I get them from. But I would go through them as just as an overview, but there will be another video just detailing these individual sites and why I use these sites. So this is MarketWatch.com. They actually have a economic slash politics calendar. Politics not so much, but the economic reports will definitely show up here. So Monday is Columbus Day. The markets are still open except for the bonds market, which I believe is either closed or closed early. Tuesday, nothing really important. Wednesday, nothing really important as well. Thursday, we do have the initial jobless claims, but we have this every single Thursday. It is a little bit more important now because the market is generally trying to see uh, how the economy is, recovering from the COVID, from the downturn for COVID. So these initial jobless claims are definitely going to be a key point for this week. Friday, this retail sales and all this stuff, it's really not. Maybe retail sales because that's been being hit a lot, and that's a really good indication if the economy or consumers are bullish or bearish on the market. But the rest of this stuff isn't really that important. So nothing really major this week. Not like a Fed meeting or anything like that. Okay, so let's take a look at this week's major unusual options play. And again, I'll have a video just kind of detailing this workbook and what exactly I mean by unusual options. But just as a quick overview, unusual options is when the volume for this specific day exceeds the open interest for that day. And there's a couple things that I am looking for in terms of the call side and also the put side. The call side, I'm looking for like 1 to 3 months expiration plays. And I'm looking for calls that are at least 15% out of the money. I'm looking for the premium to be at least 100,000, and as that percentage as a percentage of daily trading volume should be 0.25% or greater. Um, and all of these things can change over time. This is kind of what I'm looking at the moment. and this kind of just limits things to it just kind of just limits the list a little bit, to some of the more unusual plays that we can obviously take a look at. And again, just to caveat, this is for entertainment purposes. No, obviously do your own research. This is purely entertainment and just being interested in these numbers. So this is a workbook I set up. Is ran by VBA Macro. So let's quickly just filter in for the calls for this week. So on the call side, and we'll break it down for this week starting on Monday. And Monday, nothing too much. We have Capital One financials. Um, and I did look at this beforehand, and so this was Monday right here. This is the Monday. So basically on Monday it gapped up, had a nice strong candle, and it's actually at this point over the 200 SMA. And I like this play. If I were to look at this, I would actually enter in this play. And there's a number of ways to enter in this play. And when we actually get to Friday's data, I'll show you how exactly I would do it. I'll do it with options. I wouldn't actually go in and buy the shares because I feel that's kind of inefficient use. There's a couple of ups and downsides of it. For me, I would prefer to just do a put credit spread. Um, Probably, if we somewhere like 78, 77, and then maybe $200 risk. You try to get it like a 1, 2. So when these things are so far out like this, especially here since it's December, which is about 2.5 months away, you can actually get very close for a credit spread in terms of risk to reward of 1-to-1 at the money, which is pretty key, right? Because, and I'll go into this more, but if you think about a put credit spread, it pays out in two different scenarios. If the stock is going straight, or just if it's just slightly above your your entry price or your spot price, you'll make 100%. If it's above it, obviously you'll make 100%. If it's below it, you'll start losing money. But at a maximum of the 1-to-1 ratio that you set for it. So I feel that's a really good way to do it because if you think about it, it's actually almost 100% gains, and you can scale it as much as you want. So if you're just starting out, you can do one credit spread, or you can do 10, 20, whatever your risk and your capitalization is at the moment. So anyway, I think Capital One was pretty good. So let's take a look at the next one. Vex. And this is one I don't like. The reason why I don't like it, anything that's below the 200 SMA, and this is the entry, this was the flag day. And also the data, I'm getting this data from barcharts.com. I have the premium version, but the actual free version, you can get this data, this unusual options data, but only for the day, only for the current day. So you can't go back historically. Here I have all the historical data, which I did back test on, just to see kind of if it's actually useful. And I do think it is useful, and it's only my opinion, and only for entertainment purposes as well. But here I don't like this play. So this was the day here. Um, it gapped up, but again, it's below the 200 SMA, and it's below also the 52-week high, which is of 100. This is what's 236, and it's for the November expiration, and it's at 175, like right there. I feel like this, there's kind of a there's kind of a downtrend here. I feel like this is basically just a short. Someone is just, you know, someone's just shorting this 175 into November, hoping that it doesn't go above 175, or or they could have exited, whenever it's kind of goes back down. You don't have to hold the put credit spread or any of your options until expiration. You can always exit it with a partial profit or a partial loss, depending on what your risk tolerance is. So Monday, nothing really exciting. Capital One, I do believe, is a watch. So we'll put an X there. And let's go to Tuesday. So Tuesday, not that much again. There is Baidu, which is obviously a bigger name, and there's 4%. That's actually pretty rare, 4%, and it's about 1% from its 52-week average. So it was basically right here. In terms of just statistics, I found anything that's at the 50-day moving average, with you know with a with this unusual options activity is actually statistically positive or better than just randomly picking any of the unusual activities. So this was actually not too bad, if you are bullish on Baidu. I think there's probably better ones out there, but I don't think this is too bad of a play. It's 24% off the money, 155. So it's actually above the 52-week high of 147. So it's just way up there. So this expects, it's kind of in a consolidation at the moment. There's definitely support on the 200 SMA. So it could break out and be above, head towards that 155 between now and December. So there's definitely time for it. And again, you don't have to. The way I play it would be a put credit spread. You don't have to be, so it'll probably like the 125, maybe 120, or wherever your risk ratio is that you get 50, if you get a 1-to-1. And you don't have to be 100% correct. If it's like 130 or something like that, that's actually perfect as well. So let's take a look at GoGo. It was just the next one. So GoGo I'm not familiar with. It flagged it here, or yeah, sorry, here. So obviously this is a huge runner-up prior to this, and you're taking a look. It's hitting the 20 SMA. So I found the 20 SMA for really high flyers or really high momentum stock. It's a good place to enter the stock. And of course, you have to be careful because obviously it's super overextended from its base down here. Is it ever going to come back down here? Probably not. It hit a high of 1160 here, and then came back down, hit us 20, and it's starting to move up again. It was like right here, where it flagged it, and it flagged it for a call of 13, which isn't that much higher, but let's see what I'm not even sure what this company is about. So it is a in-flight wireless entertainment solution for global aviation. Yeah, that industry, I'm not sure about it in terms of the long term. So it's definitely losing money, and it's just surprising why it must have had news here. It must be a continuation of a news play. There must be some type of you know additional news on it. But I would say this is a watch. And when I say watch here, because I'm just starting this list off, starting to stream off. So I just want to go back later to see if it is actually correct or if it actually worked. The next one is LTHM. So LTHM is definitely a high flyer. So this was okay. Let's see the 6 here. So this day it gapped up. Obviously. So the lithium and the EV market, small cap, is on fire at the moment. So it gapped up and then it came back down. So there's a gap fill here at 10. This 52-week high this is this 52-week high, so which is pretty good. It thinks it's going to 15, which is way up there, and this is for November. So I think someone is definitely betting that this is going to shoot up to 15. And the way I would play this is I would probably just wait for it to come back to the 11 and put a put credit spread at 11, because I just don't think it's going to fill this gap and come back down here. I think it's going to probably come back down and hope actually right here on this day that flagged. Obviously can't enter now after the fact, but right here I think was probably a really good entry right at the 11. and to 11 to 10. So basically, you get 50-50 or $50 to 50 loss credit spread there, or you can do 9 or whatever you want to do. Um, and I think that's probably a really good play at that point. So we'll put that on watch as well. Okay, so let's go to Wednesday. So Wednesday we had quite a lot. So the first one is, I'm not sure what is going on here. So it says that so it's estimated on the volume of 7,400 contracts at whatever premium. I hit the premium because I couldn't see the other columns, but it's a 4.36 million transaction. So it's basically, where is it? Right here. So in terms of the daily volume, so this, just to explain this again, this is the premium as a percentage of the daily trading volume dollarized. So if you think about the average of 20 days, what the daily volume is, this 4.3 million is actually greater, almost almost like one of these days here. So almost 100% of a daily, trading volume, which is pretty rare. So you're kind of wondering if this is a data error or whatnot. But again, here is like a 10 ratio. So the open interest was 739 on this day. It's 7,400 contracts. So this is definitely a watch. I personally, I don't like biotech stocks. I'm pretty sure this is a biotech stock. So it's a biotech company with stem cells. I don't like them because they kind of gap really hard and then they kind of fade. But this one seems to have a really good trend going, and it's for December, the December monthly expiration at 25. And this is, obviously, this is the 52-week high here. So it's way above the 52-week high. It's definitely a momentum stock at the moment. It has crazy premium as a percentage of the daily volume, so that's definitely a watch. CLVS, what is this? So I don't even like this already. It's an oncology stock. It's below its 200-day moving average, the blue line. So definitely a no. CSIQ. So Canadian solar stock. Really, so this is the day that flagged it, the 7th, and just from a technical analysis, this is called a doji. There's a specific, it's a reverse hammer. Even though it's green, it's still green is better than red. Red is actually pretty bad, but it's still a reverse hammer. So there might be some, hidden sellers up here above 42. And let's take a look. It's 1.6% of its daily. That's pretty high. Oh, sorry. It's 1.1%. That's pretty high. It's really high above its 50-day moving average. So if you take a look, so it's been bouncing off its 20. So it hasn't really, this is a little bit too high for me. I think if 50 is not too far away. If 50 is a nice round number too. CSIQ is actually a pretty big stock. It's not like one of these small cap, mid cap stocks. It's a mid cap, but it's not a small cap stock. So $50 is a really round number. There's going to be a lot of resistance at that number. So I think that this is probably someone shorting, or someone shorting this temporary top. I feel CSIQ is probably going to come back down to either to 20 or to 50. And at that point, it might be interesting, but here I don't think it's very interesting. So I'll put this as a watch too. DPHC, Diamond Peak Holdings. This one is pretty crazy. So I'm not sure what this holding company is. Let's take a look at what it is, what industry it's in. It's a blank check. So is it one of these acquisition companies? So I'm actually not sure what it's acquiring. So we have to take a closer look at it. But so companies set up these dummy acquisition companies to purchase other companies. It's just kind of a fast way to do a merger and acquisition without going through all the loopholes. So I'm not sure what this company is doing, or what the actual acquisition is. So until then, we'll put this on a watch. And this, in terms of what it is, it's the $30 call, which I don't like because it's right here at this previous resistance. So I don't really, okay, so I don't actually like this at all. So I'm going to delete that. So GoGo we looked at before, GRWG. But it's good that GoGo did have another day where it's flagged. Grow generation. Okay, I'm pretty sure this is, okay, this is pretty crazy. Pretty has some news there. Let's see where it is at. Call is 22.5. Okay, again, I think not really liking it there. Here is the flag day here. You could go for it. It's possible. Let's see what the industry this is in. What hydroponics and organic growing store. I'm not sure if this is a leading industry at the moment. Let's see what the key stats are. Oops, sorry, per share. So it is earning money. It is actually earning money. So here it's at the 20. You would have to probably enter it at, a 17 would be good for a put credit spread. And if it pops up to 22 or something like that, I would definitely sell that credit spread or whatever you had at that point. So we can put this as a watch because this is interesting. IOVA. Yeah, this. So it's on this day here. Gap down. You got to figure out what the news on this gap down is here. And 35. Yeah, I don't like it at all. So even though it did break the 200 here, this gap down is a little bit concerning. It could go back here. This is actually at the bottom of the range for this day here, right? It could possibly be a safe play, but it did break the 200 here, though it did, kind of quickly get back above the 200. This one is probably, again, I don't like biotech at all at the moment. So we'll skip that one. RBA. So this one is on the 7th here. So this candle here, RBA 1.2%, 229,000 premium, 1.2% of this daily. SMA is, it's pretty close to this 50 SMA, but obviously it's not up here, and is looking for 75, which is actually good. So you have to think about it. You're not seeing this stuff here, right? It's on this day, right? So it's near its highs at the moment at that point, and the 52-week high was 64, so somewhere over here, and the call is at 75. So I would definitely did something here. It's hard to say because it's so far away from its 20 SMA. If you're aggressive, you could probably put a play there. But probably cooler heads will wait for it to come back a little bit. But that's definitely interesting there. So I want to watch that. UAA is Under Armour. I think it's just a different. This one's interesting too. It did break, so obviously it's been doing pretty badly. But one thing is, a lot of retail stores that have an online presence have been doing pretty well. Sorry, that's my cat. It's 0.5%, not that much. Obviously way below its 52-week high because it's just breaking. You could do something right here if you think it's going to break. It's kind of have a nice uptrend here, recovering, getting above this. And again, a lot of the retail stocks have been doing pretty well, especially those with an online presence. So I'll say that that's a watch. Though I don't think it's the prettiest graph at the moment. I do like that. Obviously you have to wait for it to break the 52 or the $200-day SMA, but that is interesting. Okay, so let's go to Thursday. So Thursday, APA, Apache is a pretty big stock again. Again, not interested in it. It's an energy stock. Way below is. It did get a pump. It's like energy oil stocks have just been doing pretty badly, so I would not be interested in it at all. BCLI. Did we look at this one? Brainstorm. Let's just quickly look at it if we didn't. So at the 30 mark, which is way above his 52-week high, a really nice strong graph at the moment. Again, this is right here. So do we want to wait for it to pull back to its 20 SMA? It's going to be a high flyer. So here, when it came back to the 50, that's probably was a huge purchase. But up here, I don't know. We'll put that on watch just to see what happens with it. Chef Warehouse, again below this 200-day moving average. Not interested. CYTK. Oh, that BCLI also had a 3%, which is pretty damn high. CYTK, okay, that's pretty ugly. I'm not sure who would actually be interested in that. Again, this is why I don't like biotech, because you have something like this, and then you also have something like this. Again, if you have a put credit spread, not that big of a deal. It's a one-to-one. Hopefully, you get into it as a one-to-one play, and hopefully, if it does gap down here, you can exit it without a full loss. But no, not very interesting, like that graph. EQT. So EQT right here. I'm not even sure what EQT is. Let's see. This 52-week high is right there at 18, so definitely resistance there at 18. It's call at 18. So I'm not interested in this at all. Not really moving. The call is actually right at the 52-week high, and where you can see a huge doji right there, rejection of that 18 level. So I feel like someone is just selling for premium there, but it is actually in January, so that person's probably, yeah, maybe it's a hedge, maybe it's something, yeah, but not very interesting. Let's see, Bang, not interested. Below this 52-week high, also energy stock, not the bless. Flying Eagle acquisition, so it's right there. So this one, this is on the 8th, not on the Friday, so it's right here. So this is one of the things that, okay, so it's actually near it's basically on the 20-day moving average and it's also a new company too, sorry, IPO. Um, it gapped up here, had a huge green candle, came back down here, and so it's right here. So you're not seeing this, right? This bump. So here, well, the thing is, like, once it gaps, you're not going to be able to look at this data until the next day, especially if you're following my stream or my YouTube. It's going to be up here. Yeah, you could go for it right here, put credit spread, or even buy the shares because it's so cheap right there, and just see if it has like a huge move later. But yeah, this is a watch. Next one, Home Depot. So a big cap, a large cap here. Home Depot at 330. This so way above the 52-week high. Um, home improvement stores have been doing really well in COVID, and it's for next year. It's 0.3%. So you gotta think about this. This is a large cap, and it's 4,400 options, and it's 0.3%. of the daily. That's actually pretty large. So this is definitely this is probably definitely a go. I would say this is a go because I know that these stocks are doing really well, and it's also obviously above its 52-week high. Here, okay, IOV we already saw that. We're not interested in that. MOR is energy. Nope, pretty ugly. MT. So up here. So this is really ugly stock. So it's basically a foreign stock. Um, so not really interested in that because I'm never sure of the options. Spirit Airlines, not that interested at the moment. It's very political as well. So now on to Friday. So each day I'll release these for each day. So the videos should not be so long. Here I'm just doing I'm doing all the days just because it's I haven't done one yet and just seeing how it goes. So CYTK. Okay, yep, we looked at that before. TPHC. Okay, I think we looked at this also. So another one at 30. You know, yeah, it's someone. I don't know. It's this one's hard because it feels like someone is shorting the 30. It's a really big marks on. So now that I broke out from this really limited range here, like heavily, right? Up to 30 to 10. So the big marks are 10, 20, and 30, right? At this point, because it's such a volatile stock. I feel someone is actually shorting these options and it's not really a player we're interested in a long perspective. GMAIA. So this one's interesting. Let's see. So there's actually two here, and both for November. So there's one at 15, which is right there, and there's one for 12, which it's actually close. I don't know. This one's a maybe. If it comes back down here to 10, you could just put something in there. But again, this is a pretty high flyer. But I'll put a and it already made this move, and I'm not sure. Oops, I keep just okay. So plan is next. So gapped up and a plan. I think this is a healthcare um, stock. No, it's not. Okay, so so it's basically a software company. So it's gapped right here. And the 50 is it above the 52 week? 52-week high is 66 right here. The strike is for 75, which is obviously up there. Um, yeah, it's not bad. I would say. Okay, let's just take plan. We'll put plan on the watch list too. Um, and we'll use one of these to explain what the put credit, why I like the put credit spread here. It broke Truist Financial 0.3. Yeah, not really interested in it. The Workhorse, we already talked about that. Here it's pretty interesting at this point. It's looking for 35, which is above here. So this is definitely a watch. I think we already did this, but win. So Hoteler, nope. Really nasty graph there. Its strike is 85, which is right in the middle of this range. So yeah, I think people are just betting this will go down more. Okay, so that's the list for this week, and let's go over plan real quick. This one of these that actually, I think one of these were actually didn't. So this is another really useful graph, or sorry, website. It's called optionsprofitcalculator.com. It really gives you a good table chart graph of your options plays. So here, let's go in plan. Let's see. Actually, let's go plan. Let's see, because I think that was probably the best one from today. Okay, and it's for the January expiration. So again, this is all estimates. You have to be really careful with this because here I'm looking in the middle of the put in the ask for both the right and for both the short leg and also the long leg. So this is what we have here. So if you take a look back at plan, $62.50. So I'm saying from now until January, if it goes up here, it's trying to go, if it's going to 75 right here, so our risk reward is almost 1-to-1. And obviously this is theoretical because it's the midpoint, but I generally think you can possibly get close to 1-to-1 if this is 1-to-1. 125. So I would say if it spikes, the way I would play this is if it spikes up to 75, or I would just take it off. If it's getting close to, if it's somewhere over here or something like that, um, about a month away, and it's kind of like 70s or something, I would actually just keep that on and see if it actually hits the full credit. And obviously, if it's below, if it drops below here I'm not really worried. But if it's kind of getting close to here and it's at this level here, what's the probability that it's going to get over here, above here? Depending, you just have to think about it in terms of the market, and it's probably pretty low. You can, if you stay in there and you ride it out, you have the full loss. If it comes back up, you have the full win or a part. You think about the partial win here. That's not going to happen, right? That's such a rare. If you take a look, that's such a rare case, especially if you're down here already, or if you're up here. That's such a rare case where it's all go all the way back down there from a percentage wise. I wouldn't even think about it. If it's down here, I'm thinking about leaving. So this is why I like the put credit spread. You have exit scenarios here. Your credit or your capital requirements is actually just the maximum risk, which is 126. Again, you could do 1 if you're starting. You could do 2 or 5 or 10, 20, whatever your capitalization is. This is the way I would play it at the moment. Um, if you buy the shares outright, yeah, you're gonna have to put in, like, you're gonna have to put in a considerable amount of shares to. I just don't think you want to do the shares. It's just, especially you have a lot of brokers just now, or actually not, sorry, with the options you still have to pay, but it's still really cheap to do a put credit spread. Um, I'll just do that for just efficiency of capital, because if you want to get these gains, like $50 there, right, from, let's just say 65, you need 50 shares. 50 shares times 65 is like 300 something, right? So here you're just doing a third of that to get 50. Again, this is all theoretical and all entertainment purposes, so do your own research on how you like to play it. But so that's the update for the week. Of the overview of the unusual options for this week. Let's go back real quick and select all the options. Yeah, so that's it. Hope this week was entertaining, and good luck trading.